Hello everyone, this is Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, and a lot more than this. We have something like 30 systems now, I think. Anyway, I've been doing this since 2003 for individual traders and professional institutions whom I consult with weekly. Okay, let's go ahead and get started here before we get into the market update. Again, guys, just to reiterate, even if you're not a subscriber to Breakpoint Trades, for now, you can check out our KISS trend systems. So again, go to breakpointtrades.com. That's with 2 T's. Again, link is in the description on the video. Go to systems and go to KISS STS tables. And again, you have a whole thing here where we run our KISS proprietary trend system across a basket here, which today IWM, a new smart trailing stop was generated today. So if I click on IWM, you can see it right here. System went long yesterday and a smart trailing stop kicked up to this initial stop was 172.40 and a new stop today was generated at 176.50. Okay. But again, you can access you can look at the basket here. You can look at tables have things such as DeMark count, all kinds of stuff. And we also have all the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs, etc. Mega 10, that's the stocks that have been leading the market this year, mostly Apple, Meta, Google, Tesla, and all these. Take a look at one of these real quick. Let's take a look at, say, Apple. So here's the system on Apple. It actually technically went long back here in January, and you can see how many, it's been under raise its stop a good dozen times or more. Current stop is currently smart trailing stop 172.80. All right. Again, so let's go ahead and get back to the market analysis. Oh, before you do that, again, if you're not a subscriber, consider signing up to our service. Click enroll. Sign up now. The best membership is our 6-month membership, which a good 98% of our subscribers choose because of the cost savings over, say, the monthly or quarterly. Okay, anyway, let's get back to this newsletter. So this is a midweek update for June 7th, 2023. Going to get this started for the general website recording. Hello everyone, this is Frailey with BreakpointTrades.com. This is the Wednesday, June 7th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Same formatting as I always keep. We'll go over the general market analysis, look at those, look at some indicators, review some key sectors, US dollar, commodities, precious metals, GDX, and of course trade ideas, which is our bread and butter here. We've had some amazing trade ideas here, and I did add a few more tonight, but just be warning here that the VIX is still a concern of ours. Today the VIX closed back inside its lower Bollinger Bands, and on the 60-minute there's MACD divergence and a wedge-like pattern, so that makes me a little cautious here on the market short term. Otherwise, today, this week especially, the Russell has led the market. It was up 1.9% today, up 3.2% for the week essentially, while the NASDAQ was down. So we've seen some sector rotation. Remember, a few weeks ago I said we needed to see rotation. We did see that, or we are seeing that now. But short term here, this VIX is a concern with the divergence and closing back inside its lower Bollinger Bands. All right, as far as systems, so I'm not going to go over the systems in depth here tonight, but as far as the reversion to mean systems, remember we still have an open SPY breakout, which went long over a week ago, still long. Stop is still fairly wide on that. And on the volatility systems, the DIA and SPY systems are short. Or DIA and SPY ETFs are short. On the volatility systems, the SPY breakout's long. And of course, the trend following long only KISS systems, IWM, Qs, SPY are long. And of course, IWM. And let's go ahead and move on. Item number two shows the index sector table what transpired today and this week. So you can see this bifurcated market. The Dow and Russell were up today. Again, we've seen a little money rotate back into some of those sectors, right? And you can see the S&P and Nasdaq were down today, and it's pretty much the same theme this week. Now the everything's down really except for the Russell, which was up 3.15%. Now, interesting stat, guys. Even though we're seeing some sector rotation, the fact that money's rotating out of these larger cap tech stocks, those are such high weightings that, even it's going to take a lot of capital going to other sectors to help the market. For example, Apple, its entire weighting is larger than all 2,000 stocks in the on the Russell 2000. It's just unbelievable. The what a group of these 8 or 9 large cap big tech stocks control. As far as the major market sectors today, kind of a mixture of up and down today. A little bit more were up than down. Like I said, we've been seeing some rotation here. Tech areas have been down, and you can see transports, banks, financials, brokers, energy, industrials, real estate. All these were up. So we've seen some rotation. U.S. dollar pretty flat this week, today especially. Cryptocurrencies remain weak, and be aware of that. Commodities here, mixed bag. Crude oil, natural gas were the strength. Weakness in the ag area, and of course, precious metals are down, which, good thing. Back in April, early May, we talked about a correction occurring in the precious metal area, and that has played out now. That also is playing out seasonality wise. Precious metals, gold tend to be weak from about early May till early July, and so far that's playing out this year. But I do believe we'll get a huge rally again in the precious metals later in the summer. And as far as bonds and the rates today, TLT, strong pullback, strong rally in the 10-year, 30-year Treasury yields. Next, image number 3. So this shows you some of the breadth on the indexes. And like I said, the breadth wasn't bad today. It was actually positive. Generally, you had more advancers than decliners. So be aware of that. Next. Item number 4, also talking about breadth. Remember, we were showing some of these indicators a couple weeks ago, the various McClellan oscillators. And again, we are starting to see some breadth come in, as you can see here on this one. We had a real big lagging effect where a lot of these McClellan breadth oscillators were forming lower highs, while the S&P and YSE were forming higher highs. And while technically you still have a divergence here, it has rallied quite a bit. So we'll keep an eye on that going forward. Next. Item number 5 shows the economic news calendar. Tomorrow is Thursday. We have initial jobless claims and, of course, natural gas inventories. I got a little natural gas long position on because of the basing. So I went ahead and held that, and we'll see how it acts tomorrow. All right, guys, let's move on. So, first image here. Expand this out a bit. So this shows you the, I don't know, let's call them the Mega 9, the 9 large cap tech stocks that have led the market this year. Tesla, Amazon, Google, Nvidia, Meta, AMD, Apple, Microsoft. So this shows you these 9 stocks with the KISS trend systems. And again, those are available, remember, right in the KISS STS tables. Okay. But none of these stops have been hit. You could see some of them have gotten really extended. Amazon had an A there. That's amateur buying. It measures volume. What it measures is smaller and smaller volume on prices that are moving higher. So it's basically analogous to small, unsophisticated traders chasing way overbought conditions. You want to do the opposite of the A's. And pulling back there, we did a Mark 13 on Tesla the other day, so it's getting a bit toppy, but it was still up today. A on Google, we had a nice pullback there. None of the smart trailing stops have been hit on these 9 key stocks. Some of them are getting a little close, like AMD here, maybe Microsoft, but keep an eye on these. Remember, the KISS trend systems are designed to keep you invested in these strong uptrending instruments and raise the stop over time to protect profits. And so there you go. But none of these have been hit, but I would keep an eye on these in the STS tables in case any of those get hit. Next, chart number 7, here's the VIX. So the VIX, and usually I don't have this until further in the newsletter, but this is still a concern of mine. So last week, the VIX closed below its lower Bollinger Band. Then it closed back inside its Bollinger Band on Monday. So that gave a VIX Bollinger Band sell signal. Well, then the VIX sold off again hard on Tuesday. And then today it closed slightly back inside with a doji candlestick. So, this could be set up for a rally. And of course, the market would pull back, especially the S&P. So technically, you have 2 sell signals here right now. Next, chart number 8, here's a 60-minute view of the VIX. And if you look here in the VIX, and I showed this on Monday, and it's more defined now, you have MACD divergence, you have a wedge-like pattern here, and you can see 5 waves down, 1, 2, 3, 4, 5. So again, not saying this can't go lower, but it is set up for a potential rally, and that's why I'm cautious here on the long side in the short term. Next, chart number 9, here's the VIX and the VVIX. That's the volatility index of the VIX, and it works the same with the Bollinger Bands. They're both giving warning signals on the market at the moment. Next, let's go ahead and look at the major indexes. So chart number 10, here's the daily view of IWM, Russell 2000. And guys, if you go back and listen to my newsletters from weeks ago, even a couple months ago, we've had this pattern drawn forever, this A, B, C, D, E. Back in May, and even back in March, I said you could be long, put a stop below this lower trend line. And then I talked about it again in May there, and I talked about it in later May. I said if you're long, move your stop up to this higher low. I said that the Russell had lagged the indexes all year long, especially the NASDAQ. And I said if I needed to go brand new long one of the indexes, it would be the Russell IWM instead of the SPY and triple Qs because it had the most catch up to do. So, and you can see that has been a big effect this week. It's up over 3.5%. It was up 1.87% today. Huge moves here. And remember, this has been a target of ours, this demand zone. Doesn't mean it stops here, but this was an initial target of ours. Great move. Congrats to anyone who has been long IWM or TNA or whatever instrument, but it's been a really nice move. And again, this is a big move this week, and considering the NASDAQ itself is down. Next, chart number 11, here's the KISS trend system chart. And again, this went long technically yesterday with a smart trailing stop at 172.40. Today it jumps up to 176.50. But again, as I showed you on that daily IW1 above, I would have went long well before the KISS system here. But again, this did go long yesterday. Next, chart number 12, here's a 30-minute view. Steve talked about this last night. Just textbook. We talked about this little wedge here in early May, which played out, leading diagonal. Price pulled back, had a 3-wave pullback ABC to this demand zone where it found support. Guys, going long in demand zones, selling supply zones is really an amazing way to trade. This is a great area to go long. And you can see the Russell's been super strong. It's basically in this tight channel here. Short term, maybe it may pull back, especially if that VIX starts to rally. But this has been a nice move. Next, chart number 13, here's the Dow. Now the Dow also has outperformed lately too. Remember, it was lagging with the Russell, but it's outperformed here a bit, and it broke out of this pattern. Now, here I drew a kind of an inverse head and shoulder pattern. I'm not in love with that. I'm just showing it. If someone was long the Dow and you wanted to stop, you could probably have it just below these confluence of moving averages. You have the 50-day, 20-day, and 9. So just right here, basically around that trend line break. Next. Moving on to the S&P 500, our proxy. So here's the daily S&P. Again, you can see, so this big old channel we've had drawn in place for a long time. You can see price rallied up to that late last week, and this week it's been tagging that upper channel line this whole time, finding resistance there. Now you have the 61.8% fib retracement from back here in August. That's a retracement of that whole bear market, and if we do push up through here again, that would be my initial target. But otherwise, we're just struggling right here at resistance. Next, chart number 15. Here's another daily chart. Just shows you the same thing. Shows you that 61 fib there. You can see how we busted out of that range last week, and we're now right in this other range. Next. Chart number 16, here's a Renko chart. So each box is 30 points. Just a nice clean chart, and you can see how this is an important area. This was previous support, 2022, resistance in 2022 in the August timeframe, and right in here. So we're testing it. Next. Chart number 17, here's a 2-hour view of the S&P. Steve showed it last night in this nice channel. You can see the other day, Monday, we stalled at the top of that channel. So far, we have 3-wave pullback here. Next. Chart number 18, here's a 60-minute view. You can see the channel here, and you can see this perfect ABC symmetry move to the channel where we've so far found resistance, and we have this little ABC type pullback. Next. Chart number 19, here's a 15-minute chart. So again, we had that symmetry move, a little symmetry break, lower high. We rallied up, basically had a little double top there, pulled back today. Now we'll see what happens tomorrow. And finally, chart number 20, here's a 5-minute view, just showing the action here today and the last couple days. Next, chart number 21, here's the 4 time frames with our custom indicators we like to look at. The daily, here's the 195-minute chart, the upper right. We've had that resistance cycle up here. Price is logically stalling here. Remember on Monday I talked about these wide moving average ribbons that needed to be worked off, and you can see that is being worked off. Okay, so far more of a sideways movement, but you can see on the 78-minute chart here we had a mark 13, some amateur buying there, resistance cycle. So logically price has been at least struggling there, still above the ATR. Next. Chart number 22, here's the daily kiss. Again, stop still pretty wide down there at 40.66. It hasn't been able to move it up yet. My hope is that it's going to get to move it up here sometime, when the market does try to push again. Again, there's plenty of room here for a little pullback correction if that VIX rallies and the stop not to be hit. Again, you can see how wide the moving average is on the daily. That may need to be worked off. Next. Chart number 23, here's the triple Qs. Again, in this steep uptrend channel. Again, this uptrend channel was the area to take profits, maybe take an aggressive short, and you can see nice pullback today. Next. Chart number 24, there's the weekly, showing you the same thing. Channel into that supply zone. Next. Chart number 25, here's the 2-hour view. You can see the channel. Again, this second test of the channel, especially since we had that negative MACD divergence, RSI divergence, that was a low risk short. Next, chart number 26, here's a 15-minute chart. On Monday, I talked about this 5th wave high, and so far that's played out. You can see the wave 1, 2, 3, 4, 5. Yesterday price pulled back. It was up today, made almost a double top, just a slight lower high there. So technically that wave 5 denotion there looks correct. Finally, chart number 27, here's a 30-minute chart. Steve showed this wedge last night to subscribers. pulled back. That's played out. There's a demand zone here. We'll see if it can bounce in here or not short term. There is an open gap down here, May 25th. That could be a magnet over time too. Next, chart number 28. Here's the daily KISS trend system. Again, smart trailing stop still pretty wide from price. But again, it talked about the moving average ribbon, how wide that was. I talked about that on Monday. And this is this indicator here, the BPT 4MA normalized difference. So that basically measures how wide these moving average ribbons are. It's normalized from 0 to 100%. And it was up there around 84%. And that's about as wide as these ribbons ever get. So that was a warning of a reversion to mean type pullback. Next, chart number 29. Here's the 4 time frames. Again, price has been pulling back as expected. You can see on the 78 minute, it lost the ATR. We do have a little DeMark 9 there, a little support cycle. So that does it on major indexes, guys. Again, to me, short term, the VIX is something to be monitoring here. Next, chart number 30, moving to bonds, high yield corporate. So they started pushing late last week. They were down today though, retesting this trend line and these moving averages. We'll see if it can hold that. Next, chart number 31, TLT 20-year bonds. Big sell-off here. Price, as you know, last week stalled near the downtrend line there, just below the 50-day moving average. Now we'll see, is this going to form a higher low or is it going to go all the way down? Remember, as bonds go down, interest rates go up. Next, chart number 32, here's the 2-hour view. So this falling wedge we showed a couple weeks back, that obviously played out. Now, is that it for the rally, or could this still be an ABC, this be a B? But it really needs to get going here if it's going to form a higher low here. Next, chart number 33, here's the 10-year Treasury yield weekly chart. So far the 10 years up 2.5% this week. Hasn't broken out of this large weekly channel flag, but something to watch over time. If it were to break out over that over time, I don't think the market would like it. Next, let's go ahead and move on to the market sectors. Chart number 34, here's XLK Technology. Remember, XLK has been the leader this year, and those 9 stocks like Apple and Meta, Nvidia. But it rallied right into the supply zone, and price is logically pulling back from there. Okay. Next, chart number 35, here's the transports. So we're starting to see some rotation in these other areas. So some money out of the tech is going to these, but is it enough? I don't know. So transports moving up here, broke out of a resistance trend line, rallying up. Next, chart number 36, XLI Industrials. I showed this a few weeks back as a tight coil, busting out of here now. Next, chart number 37, there's the daily. So you can see this nice breakout from that coil, rallied off the 200-day moving average last week. Next, chart number 38, XRT Retail. As you know, they were in the gutter, especially Target. Anyway, this area's rallied back up quite a bit. Next, chart number 39, XLF Financials. They're moving up too, and as well as regional banks. Next, chart number 40, here's the KRE regional bank. So far this month, it's up 14.4%. Of course, huge rally off that 14-year downtrend line or uptrend line and the demand zone. Next, chart number 41, PACW, PacWest. It's a regional bank. Steve showed it last night. It's popping over resistance. Next, chart number 42, oil services. This is the weekly chart. Again, notice how price has found support at this demand zone. Long-term uptrend line. Here's your supply zone. That would be a good target if it got up to there. Next, chart number 43, XLE Energy, also breaking through some resistance. Next, chart number 44, here's the bullish percent energy index. Remember, this is always a good guide whenever the BPDR is up here in the 80, 90%. These are areas, think of these like your supply zones. Those are areas to start taking profits. And when it's down here, demand zone when it's oversold. Remember, the bullish percent chart here can go from 0 to 100%. It got into the, more oversold range here a week ago, and it's now moving up nicely. And you can see the wedge on OIH too. Next. Moving on to commodities, chart 45 DBC. This is the weekly, up 0.25%. Again, it did rally off that 200-week moving average. On a weekly chart, that 200-week moving average is always a player. That was a logical area to attempt to swing long with a stop. Next, chart 46. There's the daily. Again, it came down to this lower trend line. So again, if one wanted to be long, have a stop down there. It is objective. Next. Chart 47 here is crude oil, just kind of chopping around here. Long term, it really needs to get over this 200-day moving average. You can see that's been resistance since losing it back in August. Next, chart 48, natural gas. It's trying to base out here. Natural gas is not an easy trader. They call it the widowmaker for good reason. But it is trying to base here. I am long a little bit of it via the Boyle ETF. Next, chart 49, there's a 60-minute view of Boyle. It gapped out of this downtrend channel. You got a little higher low. That's where my stop is, right around that 248 area. Next, chart 50, copper. Copper did find support at that lower trend line a couple weeks back, but logically stalling up here at the 200-day moving average now. Next, chart 51, DBA, agriculture, logically stalling at the little downtrend channel here, weekly flag, whatever. Next, chart 52, uranium. This is the monthly chart. Again, I love the look of this uranium monthly chart. Remember, each candlestick's a month, guys, so if this does play out, it could take a year longer, year and a half. But, if this does play out, I could see this rallying up into the 30s. You can see our moving average ribbons pinching. Volume's been declining, RSI 14 is over 50%. Everything's set up. Next, chart 53, US dollar. US dollar, again, pretty flat for the week. Remember, it found support at the supply zone back in April and May. Current support is this 20-day moving average. Next, chart 54, Bitcoin. So Bitcoin, I showed this head and shoulder pattern on Monday, and it back tested the neckline, and you can see it still remains weak. Next, chart 55, Mara. We've been showing this one. Very choppy, as you can see here. More just in a range. Best to look at a 2-hour time frame. Chart 56, here's the 2-hour time frame, and this is the epitome of chop. This is ABC, ABC, ABC. Now, why is that important? Things go through consolidations. When something's been in a long consolidation, whenever this finally breaks out of this range, whether it's to the upside or the downside, it should be a trending move. So you could jump on board whichever way it breaks. Next, moving to precious metals, chart 57, gold, down 1.2% today. As you know, it rallied off that uptrend line a couple weeks ago into the demand zone. Rally stalled at the 50-day moving average there as expected. First moving average ribbon pinch. Now it's pulling back, and if it loses this trend line, I could see another down move, which I welcome. Remember, we had this as a rising wedge back in April, early May, and that is playing out. And I would be a good buyer on gold if it does sell off and make a new low. What I mean by new low is taking out the May low. Next, chart 58, there's silver. Next, chart 59, GDX daily. Again, also pulling back nicely. You got a good bounce trade last week, but hope you took some profits. Next, chart 60, there's the 2-hour view. Again, just kind of like TLT. This is one possibility. You had a wave A up, you got an A, B, C, but to form a higher low, it needs to do so fairly soon if it's going to be a wave B. And then I would view it as a C up. We'll see. All right, guys, moving on to some trade ideas. First off, here's Apple, Crapple. So Apple, logical pullback from that upper channel. Divergence has been building, and kind of a sell the news, right? With the, I'm sure none of you are going out and splurging on that $3,500 AR VR headset. Next, chart 62, NVIDIA. Also pulling back here lately. Again, it's definitely welcome. Next, Jabber 63, Netflix. This was a beautiful long of ours back in May out of this coil. Still holding up here, but it's a bit toppy now. Next, Jabber 64, Tesla, still hanging in here. Up today, but a black candle. Be aware of that. So, again, if you want to see where the trailing stop is on the KISS systems, you can do so. Let's just take a look at that. Remember, you can use the search box. Tesla smart trailing stop is 195.50. There you go. But again, DeMark 13 the other day, it is a bit toppy here, guys. Realize that. Next, moving on to other setups, Jabber 65, SYM. This was a long idea of mine in Monday's newsletter. It was given to us by one of our subscribers. It was coiling, and look at this puppy, up 12.7% today. Congrats if you bought this yesterday inside the coil. We love coils because you can have these explosive moves. Next, Jabber 66, IPI. Really nice trade lately. And again, guys, here's an example. Nice low here. You had MACD divergence, but you had a textbook perfect MACD kiss stochastic oversold setup. And if you're new here to Breakpoint, here's what I mean by that. It's a situation where the MACD lines are kissing, but they're not crossing, and a stochastic gets oversold. So that doesn't occur very often. That was a low risk setup. You take your long triggers just over the doji, 1 penny over the doji with an immediate stop at the low. Played out beautifully. Next, Jabber 67, Moss, another one of ours that have done nicely. Next, Jabber 68, CELH. This was a long idea a couple weeks ago. We illustrated this as a wave 4 pullback, and you had a perfect doji right off the 20-day moving average. Again, you could have triggered 1 penny over that doji, put an immediate stop there, and it played out beautifully. Should have taken profits on that 5th wave. Again, 5th wave, here's a pro tip, guys. 5th waves always have MACD divergence. Okay, if you don't have a MACD divergence, it's likely not a 5th wave. It's likely some sort of wave 3. Next, Jabber 69, CMO. This thing has been unbelievable. This is a long idea of mine back in May with the resistance. The breakout was 55.63. Look how far this sucker's rallied. Again, I'm not perfect, guys. I sold it way down here around $61. So I should have kept it. Next, Jabber 70. Here's a weekly chart. Again, you can see why it rallied. You had essentially had a double bottom, bounced off this big supply or demand zone. Now you got a supply zone up here if you want the next target area. Next, Jabber 71. Plantier was a long idea of mine back in early May. Played out beautifully, but today, ugly candle there. Again, if anyone's still long, I'd really tighten those stops up at this point. Next, Jabber 72, NNOX was a really nice long of mine a week ago. Really moved out of the coil. It's now pulling back. Again, guys, some of these, you definitely want to be taking profits. Reduce your positions. Next, Jabber 73, LYEL. This also played out nicely. It's pulling back now, though. Next, Jabber 74, CRMX. This was a beautiful flag. It got up into the demand or the supply zone, pulling back. That was a good area to take some profits. Next, Jabber 75, Disney, the mouse. The wedge played out. You got a higher low here as a stop. And at this point, I'd probably move the stop up again. No reason to give it too much room. Next, Jabber 76, Budweiser. Finally bounced. Remember, I viewed this, I said this looked like a low risk long trade back to the 9 EMA, reversion to mean, and we got that. By the way, some news. Modelo now has dethroned Budweiser as the biggest beer in America. Next, Jabber 77, XMTR was a nice long idea. Busted out yesterday, a little pullback today. Next, Jabber 78, American Airlines. It's been on a long list for a while, trying to break out a little bit today. A lot of Americans traveling. Next, Jabber 79, Tier, one of Steve's coils last night, broke out a little bit. Next, Jabber 80, BBAI, it's kind of an AI stock. It did test the 200-day moving average. I bought some a little bit there, still long, but ultimately we'll see if it can move out of there. Again, the AI stuff's been pulling back lately. Next, Jarbor 81 TGTX, one from Steve last night. Still valid here if you're long. It triggered over the trend line. Put a stop maybe yesterday's lows or the below the 50-day moving average. That would be a logical area for a swing stop. Next, Jarbor 5282 BABA. Also, really no changes here. Still testing the trend line. Let's move on to some new setups, guys. Jarbor 83, Quad C. I love the base here. It's trying to break out of the little base, so I like these basing patterns. Next, Jarbor 84, 9. Now, here's an interesting chart. This was a long idea of mine back in October of last year. In the threes, it rallied all the way to 17. So we rode this puppy all the way up. This is why you can't marry stocks. This was a good area to sell up here. It came all the way back down. Okay. Now, it found support of this previous long-term support, and it looks like it's trying to rally here. Look like it make it to the 50-day moving average. But I'm just showing you guys, you can't marry stocks. You always have to have an exit plan because things like this can happen. Next, Jarbor 85, ADMA. Here's a new setup. Nice coil. I like these coils, as you know. Next, Jarbor 86, Rexar. Pulling back into the demand zone, trying to rally, increase in volume today. Next, Jarbor 87, VICR. Rallied off the 200-day moving average. I like the volume today. Next, Jarbor 88, SDA. Here's a wild one, some Chinese play. You know, I didn't look up what the news was. Rallied from, look at this thing, rallied from $3-4 all the way to 45. Pulls all the way back here to support. You know, is it going to try to rally again? I don't know. But, you know, if you want to play with some fire, there you go. All right, guys, that'll do it for the newsletter. Let's see a quick check on futures. ES futures are up 1 point, so pretty flat night. We'll see what happens tomorrow. Have a good evening. Have a good week. Take care.